But we've been bullish on the US dollar for quite a few years, and our forecasts still imply a little bit more upside for the US dollar. Having said that, we're getting a little bit more cautious about buying dollars here because we know that the long-term uptrend that the US dollar has been in since 2011 is mature, and some of the supportive factors that have been behind that US dollar rally are starting to fade. So instead, we're expecting more of a choppy topping process in the US dollar. It tends to be a good environment to trade currencies, maybe less so for the long-term buy and hold strategy. Now, in the short term, we're actually seeing some good reasons why the US dollar might weaken over the next couple of months. For one, we've seen a huge shift in sentiment. The market is now extremely bullish on the US dollar at the highs, just like it was extremely bearish at the lows in 2017. And that swing in sentiment is making us a little cautious. Secondly, we're seeing economic momentum in other countries in the globe, UK, Canada, Japan, starting to improve, catching up a little bit to the US. And that'll keep central banks in those regions tightening at the same time in 2019 as the Fed is sort of nearing the end of its tightening cycle. Now, the one question we're being asked is whether that US dollar decline in the short term could create an environment where the Canadian dollar rallies. And we think the answer is no, because Canada faces its own challenges. The discounted price that we face for selling our crude on the international markets, and our inability to get that crude beyond just North American borders. The competitiveness challenges that Canada faces, and the large and persistent trade deficits that result. And then third is this NAFTA and tariff uncertainty, which is making businesses, both Canadian firms and international ones, reluctant to invest in Canada. So those three things combined really dent the economic growth outlook in Canada, part of the reason why we're below consensus in our economic growth call. That we think will translate into the Bank of Canada hiking interest rates fewer times than the market expects, and causes us to put our Canadian dollar forecast at 135. That implies about a 3% currency weakness.